Loud and clear. Okay, thanks, Chief. All right, let me just log in here on the YouTube side and we'll go ahead and get everything rolling. WallStreetJackBoys.com. Oh, all right, and then let me just share these in the groups. Then we'll be ready to rock and roll here. All right, guys, having a good weekend. Good Mother's Day weekend. Hmm. All right. I can see that right there. All right. All right. It's a homemade lemonade, uh, blueberry lemonade that my cousin told me about. So when it made some, no sugar in it, nothing. It's really good stuff. All right. So let's get this popping. All right, all right. So welcome to Game Plan Sunday. Today is May 10, 2020. Happy Mother's Day to everybody that's out there. I hope you guys are having a wonderful weekend. So for that reason, I'm not going to take up too much of your time here. I got some fresh food that just came in. I've been waiting for like over an hour for this to get in here, so I'm ready to get to it. So let's get through it as fast as we can. All right. So last week, pretty interesting week. As you guys already know, we have a lot of negative economic data that's being reported every week. So much of it is really no need to even go into the numbers. Just know that it's still bad. However, the stock market has continued to rally throughout the bad news. So we're actually looking at a stock market melt up, if you will, which makes things interesting. So, with all the normally under normal circumstances with the bad economic data, the markets normally will come down. But because the Feds are throwing everything into trying to stop the bleeding here, the markets are rallying off of that, and a lot of things off of hope. As far as fundamentals go, there's nothing there to support the claim on the fundamentals here. We had Warren Buffett shareholders meeting 2 weeks ago. We talked about that and we dissected that whole situation. So if you guys are members, make sure you go and get that. It's on the website. But basically, even Warren Buffett was saying that he don't see anything worth buying. So everybody was mad at him. It was like, hey man, you're sitting on 137 billion. You can straight up buy these companies. And in the last recession, they called you and you came through and you supported these companies. You came in and bought them. You were the lender of last resort. But this time you're not doing it. Why? He said, simple is I don't see nothing worth buying. So that's the Oma, the Oracle is saying that he don't see anything worth buying. It is what it is, right? So it makes things interesting though. So we talk about, this is a day trader's market right now. Why? Because there's money to be made. It's in trading though. On the investor side, yeah, you can make some short term, but you got to be careful. I mean, this is really sketchy stuff, really sketchy territory that we're entering into. So it makes it hard. We talked about the theme last week was sell in May and go away, right? That's the whole saying on Wall Street. They sell in May and they just go away. And that's under normal circumstances. Okay, when times are good, times are bad now, and so it is what it is. So just taking a look at what we saw here, we had a lot of the ADP numbers that came out. We had the official unemployment numbers that came out last week as well. 14.7% job loss in April. 20.5 million jobs were lost in April alone. I think we had about 34 million jobs lost, since the pandemic, since the bubble started, popping here. So over 30 million jobs lost, and the stock market is, continuing to go up, which is interesting. So something that's interesting. Let me actually look at the charts that we got. And again, we're not going to make this a long session. We're really going to get into it quickly. I'm going to try to get you guys in and out here as quickly as possible. All right. So we take a look at the indexes here. We do have the S&P 500, which is looking pretty decent here. Okay, it's like halfway recovery point. Got some resistance up ahead. We do have a squeeze that's in here as well. But what I want to do is cipher through the indexes real quick to show you where all the power is coming from. So that's the ES. Let's take a look at the Russell. And let me just annotate this a tad bit here. And you take a look at the Russell here, like ever since the drop, right? The Russell has came up a little bit, but not as quite as strong, right? It's come up here to its 100 moving average, and it's still, under that trend, right? So it's still not, the best of these indices, right? And then let's take a look at the NASDAQ. Bingo. This is where the cream of the crop is at, right? So if you're looking for the cream, you got to get the cream in the NASDAQ, right? And so you take a look at the NASDAQ, it's trading above all its moving averages, right? So since the drop here, floored out there, all your moving averages are present. Okay. And the stock is trading above its moving averages. So all the momentum and everything has been in the tech names, right? And the crazy thing is that if you just take a look at the stock market alone, then you have a really narrow mindset about, what's really happening. The economy is in shambles right now. Although the Feds is doing everything they can to keep this thing going, I mean, they're causing long-term, negative consequences by doing all this printing and all this lending, and now they're buying, bonds and all these things. This is really, really bad. But a lot of these tech companies are rallying, and it's almost looking like the freaking .com bubble that's forming in these tech names. And I just told you guys, if you just joined in now, that even Warren Buffett said himself he don't see anything worth buying right now, right? That's Warren Buffett. I didn't say it. However, mother effers is buying. All right, it's been going up. So the concentration here has been in the tech names, and I believe we're going to get some more rallying here. But just look how close we are from its highs, right? Right, you had 97.63. It's trading at 92.21 right now, right? You can see that right here. It's only a stone's throw from the next high, and that's where the market is really trying to push to. The markets really want to push to pop this new high, and we've seen in the past every time. It doesn't matter for any particular reason, they're gonna make sure this thing gets up here. All right, so whether fundamentals are there or not, whatever manipulations can happen, they really want to get it up there. And I don't know when we're going to see that, but I believe that we can possibly see that out of all the indices. We just went over the ES, we just went over the Russell, right? Didn't even touch the Dow, doesn't matter. But just looking at the NASDAQ is in the best shape of all the indexes. So that's where all the names are. If you guys took a look at the markets, it was rallying last week. There was some really big pops. I don't know if you guys caught some of those super big pops that was popping off last week, right? But all of these is concentrated in the NASDAQ stocks. The NASDAQ is the tech stocks, right? So you just pull apart the tech sector. You saw like Wix, right? Look at that. This was last week. The pop off was in there, right? Bing, 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 all the way up there, new highs, right? And these tech stocks. Look at Ubiquity. Squeeze, pop, bow. Okay, that's right, Ron. Twilio was crazy. Yeah, Twilio. Look at that. All of this was in the tech sector. Okay, I mean, despite you had some earnings, right? You had Twilio had earnings, right? and they had pretty nice earnings, right? Um, you know, all these companies, it was popping, this crazy pop off. This is where the money was at last week. Okay. Um, so with that momentum coming off into this week in the tech stocks in the tech sector, I expect us to see more, positive movement in the tech sector. All right. So, that's what I'm taking a look at, for this week. If you're looking at some tech names, let me actually just pull up some real quick. All right. So here we have, what's this? Arista Networks. Okay. Look at this setup here. We got a squeeze setup. Let me just change it up a little bit here. Now we've seen, this 100, the 100 moving average is a strong indicator of a resistance, right? And this 786 is also strong because it got blocked out right there. So we know we're up against resistance. And normally, when you get up against resistance, you get rejected. But under this circumstance, we do have a squeeze that's in play, right? We got the trend that's starting to shift up. We got momentum shifting up. We have a buy trigger, and we have earnings behind us. Earnings behind us now. And it didn't fall much, right? It came right here, snapped back up, and it's popping through, trying to clear this 100 moving average. Because it has a squeeze, the squeeze should give it enough power to be able to push through this thing. So, um, that is a name that could, again, this is an idea here that I am looking at. ANET. In fact, let me see. Let's just go to the options chain here real quick. All right, so this is, again, for you new guys, if you're taking a look at this, when you go and you see a stock that you like, right? Sometimes the little cheat sheet is like right in front of you. It's right on the options chain, right? So we go to the 40-day contracts, right? Okay. We can see, 25-point movement right up in here, right? That's what we're expecting. So you say plus $25 to the 218 or minus, 25 from the 218 and you get your range, right? And let's see. If we look here, let's take a look here on the put side, right? Look at the volume. Look at this. Look what sticks out like a sore thumb, right? That looks just like a setup that we use when we're bullish on a stock, right? Bingo. That looked like a put credit spread. All right. I mean, it's just giving it to you. It's a lot of activity right there on a put credit spread, right? It's a bullish put credit spread right there. You can also see a lot of activity right up here to about 250. The 250 strike. Look at this activity. Heavy activity right here in this range. And like this all fits the narrative of the expected move, right? So you can see setups like this, right on your options chain, right? So you're like, oh, what should I do? Well, I mean, you already see where the action is at. Action is right here at the 185, 175 strike, right? You don't want to buy these out of the money, calls out here, right? But you could do the spread right here, right? So that's just the idea. I mean, you can see it clear as day. It's right on your options chain. So I just want to share it with you guys. It doesn't mean that that's what it's going to do, but I'm going to risk the capital for it. The risk reward isn't that great, but the probability is. So when you take a look at the probability of this thing expiring out of the money, we got 79%, 80% probability. So the math is on your side. As long as the stock does not, fall beneath this level here, I mean, you're good to go. You keep the whole credit, right? You pull in the credit, you keep the whole credit. And this is outside of the expected range, $25, right? Subtract 25 from 218. I think that's what, 180 something. You guys could do the math for me. But you can see that as, high probability, 80% pretty much that it's not going to move outside of that range. So that's a good setup. And even if it doesn't play the direction, if you play the spread itself, you're good to go. You make some money. If you play the call side, you got to get the direction and everything else right, or you have to cut your losses faster. So the spread would be like a safer bet, I should say. But yeah, you see names like that concentrated in the tech sector, right? And then you also have like Cisco. We have a very similar setup in Cisco. Again, these are pretty much counter trend trades. They're moving up. They got resistance up ahead, so they have to clear this resistance. But because the squeeze is present there, we have a little more confidence that it can push through. We have a buy trigger that says, "Hey, get in." So we have confidence that we can push up to like the 786 level, somewhere around $45 at least on Cisco as well. All right. Um, Yeah, I think that's pretty good stuff right there. What's this one? Ah, don't like this. This right here might be a short actually. I think it probably popped off too fast. What is this? Hmm. Yeah, this one right here. This thing popped off too fast. This may be a short idea right here. So far from its mean. So whenever it kind of pops off like a rubber band play is popping off, and it's like stretched out, and then it's got to pop back, snap back to its mean. So this right here might be like a reversion to the mean, like a quick, quick pop off play where to come back down right here to the non-moving average. And we've got some sell triggers up here at the top on the intraday chart. Yeah. Uh, what else? Um, Interesting thing is Disney has a squeeze, and this is an interesting one in itself. With Disney been shut down and everything, is find it kind of crazy that you know the earnings came out, right. So the earnings came out, they missed earnings, as you can see, but the stock has been going up since earnings. I mean, bad news is good news these days. Is just, it's crazy, right? So, but why is the stock moving up? I don't know. There is a setup here. Um, we got the buy trigger that was right here. We got another buy trigger that's right here. Earnings is behind us. The only thing I can see popping off for Disney is its TV network. With people staying home watching that or whatever. You say MJ Last Dance. They have some kind of something coming out with that. I have no idea, right? I know that the parks are closed. I mean, how are they going to take in revenue from that aspect? It's just crazy to me. Even if they open things up, who in the world want to be in Disney, Disneyland with a mask on? And then they're rolling out all these guidelines that you got to do temperature checks and all this other stuff. So most people go down to Disney, and you got the kids with you. I mean, if you got kids, kids get sick all the time. They got fevers and all this other stuff, and one of them, tests for the fever. You can't get in the park, and you spend all this money to go to Disney, and now you can't get in because your kid got a fever or something crazy. I mean, you're probably gonna be a pissed off camper. So again, I still don't see anything, that I can see, but except for in the stock world here, I do see the setup here. So excuse me. So we try to, align setups with stories. And sometimes, I mean, you don't need all these ingredients, but it's a boost of confidence. It's all a confidence game at the end of the day. So you get your confidence. I get my confidence by taking the technicals with the story, and then I have a nice framework I can go with. I don't really see it here, but I do see the technicals is beaming out at me that, hey, this is it's a long setup. We got the squeezes right there. We got a buy trigger that says get in here. We do have resistance right up here at around the 116 mark, right? So that's the first level of resistance. Second level will be right here at the 100. So 130 basically tops. So I can see that coming. So that's the setup right there for you as well. Disney. And I think that's about pretty much it. Excuse me. Um, Let's try one more. And Pepsi. Pepsi may be able to bust a move off in here. The consumer staple stocks, these consumer discretionary stocks. Consumer stocks been doing pretty decent, man. Pretty well actually. But as you guys can see in this one here, let me just get us some levels. All right, cool. We're in this range right here. We do have a squeeze popping off right here. We got the trend that's moving up. We got momentum that has shifted up. We have a buy trigger as well. We have an established floor that's right here. That's your risk. We do have to get through this resistance level here. But we pop through this resistance level, we come back up, chase this new high. That's what we want to do, is chase this new high. So I can see that there. If you want a little more defined target, what you do is just take you can just take your Fibonacci on that and just take the longer peak right here in this range right here. Bingo. And so you got a 145 target right there if you want a little more definitive range right there, right? So the 140 is the first, about 140 is the first stop, 144. All right, so those would be some targets right there, and that's in Pepsi. So those are the setups that I can see so far. All right. And what do we notice coming up now? I know they had Steve Mnuchin. He was talking about unemployment rates are going to get even worse, which that again is still more negative news. We still haven't felt all the pain yet. But with the feds, coming in, buying everything, and it's, everything they can think of. Even the bond king, Jeff Gunlock, was talking about how the feds are basically operating outside of their guidelines with even doing so. He said it violating the Federal Reserve Act of 1913, you know, because they can't actually do those things directly with companies. But what they're doing, they're again buying these junk bonds, these corporate bonds, to bail out these companies. And so they're getting these bailouts. But from my understanding, they have basically created another company to funnel the money through, and then they can get the money from that company. And this is the type of crazy things that's happening right now, where again, every recession is all about them trying to figure out a way. It's kind of like I think about it like with criminals, right? You take criminals and you throw them, you lock them up in prison. Does it make them stop them from being criminals, or do they learn how to become better criminals, right? You guys know I have a background in the street, so a lot of my guys, I still got guys that's doing life sentences, right? I mean, these guys are in jail with cell phones, right? I mean, they're calling home, checking. They know everything that's going on, right? How do they know that? So they just figure out better ways to do what they've always been doing. The same thing with the feds. They're getting trying to get better with manipulating and to try to keep confidence in the markets and everything. And so, you're seeing that happening in real time right now. And that's what makes it a little difficult for, any economist to really call it. We know what we see traditionally, but we don't really know if these unorthodox things that the feds are doing are going to materialize anything. There's no evidence to support that it will. It just makes things worse. But if you take a look at the stock market, right, and you see that, we're a stone's throw away from new highs, basically. Pretty sure we're not going to catch it this week. Yeah, I'm not too sure if we're going to catch it this week in the Nasdaq, but the Nasdaq is the closest to hitting new highs. But if you take a look at it like that, like, hey, stock market is going up new highs, right? So anybody who has their money vested in stocks right now, and these Nasdaq stocks, their wealth is going up. Meanwhile, in the economy, you have almost 35 million people that's out of work. No jobs, no money coming in, and this exacerbates the wealth gap. So when the feds come in, everybody's saying hooray, hooray. But at the same time, this is the cause of the wealth gaps that you're complaining about. That most people don't understand how this stuff works. The asset owners are the ones who's, participating in this. You don't own the assets, you don't own the stocks, you don't own the real estate, then you're not participating in this. So you just keep that in mind. This tend to lend to, the wars of the haves versus the have-nots, because people are out of work, people are getting, real antsy, getting crazy. We got, again, I've been talking about this for the longest. You got guns and ammo sold out around the world. We had Elon Musk that came out. He's been spazzing since his earnings. I don't know if y'all caught that report and everything, but he's basically calling the way that the government is moving as fascist. And it is. I mean, it's pretty much fascist. They're nationalizing the economy, where they're going to set the prices, they're going to set everything, right? And that kills productivity. If you guys are not students of economics, you wouldn't understand it. And I don't expect for you to understand it, but just understand you're pretty much, the environment is a social environment, okay? But you got to have productivity. You can't consume what you don't produce. And so, with everything shut down, people can't produce anything, but yet people still want to consume things. Um, Something has to give. And then you also have the tension with China, that's still continuing to exacerbate. They claim that they got on the phone call, and they may be talking more about this trade deal, the phase one of 4-part trade deal that Trump's supposed to be having. I don't really know if that's coming through or not. But the week before, we talked about a game plan Sunday. When I saw the interview that was asking Trump about, the Rona, basically he was saying that he had some evidence that, China basically came up with this thing and basically sent it over here. And somebody was asking him, how you plan on punishing China? And he was saying that, we can choose not to pay our debt, with them. And you guys know China own and control most of our bonds. So when we want to spend money, the government issues bonds, China buys it up. That's how we get money to run these deficits, right? And so he's saying that, we could choose to not pay them. And Trump said, yeah, I could do that. He said, but I got a better way to deal with it. I can get the same results. All I got to do is tax them, put more tariffs on them. And that doesn't sound like a friendly conversation. It doesn't sound like progress made. So, on one end you hear this, that, and the third, but then on the other hand, you see some gesturing, right? And China can really have us by the balls. China can sell all that on the markets, and bring calamity. Now it'll also hurt them at the same time because we're too connected. But we're at some dangerous, treacherous times, So just understand the environment. Again, this is China. We're in the middle of war. It's China versus U.S. They're not going to put it out there because they don't want people to think it's militarized, and it's a war, but it's not a militarized war, not yet. You see in biological warfare. You see in weather warfare. You guys seen the weather now? It's just freaking crazy, right? You got freaking tornadoes. We got blizzards, cyclones, all kind of crazy stuff happening with the weather that's totally abnormal. And I remember years ago watching a special on what was it called? Was it the History Channel or National Geo on weather warfare? If you guys can find that, check that out. Weather warfare, and it's about major countries have these ionization farms, and they push up the ions to move the jet streams to cause droughts and flooding and hurricanes and things like that. It was talking about how like Hurricane Katrina was a weather warfare, that they can do these kind of things. So I know some people probably like, oh, I don't think they can do that. That's conspiracy. No, just go look it up. It was live on TV. You just wasn't looking. Go look it up. It was live on TV. Look it up. It's called weather warfare. And so it's interesting. I'm seeing this now. I'm like, yo, it's tornadoes like every week, and we don't get tornadoes down here. So it's crazy. But those things have negative economic impacts as well. Um, but all I say is, you guys be safe out there, man. Take care of your family, your loved ones. Right now it's really all about survival. A lot of people are dying, from the virus itself. Some people won't, come out on the other end of this thing. Once the economy comes back, you know, and you have your capital to the side, and you can start deploying, much more efficiently versus now. And now it's a little much harder right now. It's more gamblers are able to come in and make some money, but fundamentals reasons things are just terrible. So anyway, just keep up your survival spirit and everything. We talked about gold and silver. You guys already know where I stand at with this. Okay. Gold and silver, I believe they're going to keep on, doing what they're doing. I'm going to have some buying opportunities. Was that last week? Um, Silver is definitely in the best position from where I'm looking at it at. All right. So with silver, I posted this on the website. You guys not on the website, make sure you check it. And if you're a member, make sure you check the website like on a daily basis. See who's popping, who's talking, this, that, and the third, and make sure you post on your timeline on the website as well, so we can see what you guys are talking about, gain some perspective. Um, we got a buy trigger right here on silver. Now it's up against resistance, so keep that in mind. But we got a buy trigger, and we got a squeeze in there. We got the trend moving up, momentum moving up. That was a buy trigger again. So two buy triggers in here. So I'm expecting for us to get up about right here. So I'm still bullish, still long silver. And again, this is paper silver, the futures contracts, the real silver. You can barely get your hands on this stuff. Uh, barely get your hands on this stuff. Megan, what's up, Megan? I see you in here. Did you get your shipment in yet? I know you had ordered some. I just got one of my shipments in last week. I know Mark said he got his in like the week before. A lot of us who've been buying, the physical stuff is, we've been waiting for months. So just keep that in mind, man. This stuff is good stuff, man. Good stuff. And they keep on printing money. So, currency is going down, going down. Gold at the same time, if you take a look at the charts, I believe that gold is going to do what it's going to do regardless. I just left my whole annotations up here, and it's pretty almost fitting. The setup looks more clear on silver than it is on gold, and that's interesting. But you can see the shift here. We had a trigger right there. Shift the momentum right here. I don't have a buy trigger on my chart right here because gold looked like this want to probably come down a little bit more. But overall, it's going to move up. And again, you guys remember, was it JP Morgan? They still got the target. I still got that target on my charts. If I go back, where I'm at. This is long term, right? Bank of America it is. All right, Bank of America got a 3,000 target, $3,000 target. This is where they are on gold, right? I mean, that's very aggressive. I'm just looking at my Fibonacci levels. I got the 2100, 2400, right? That's long term. So looking at time in the future. Okay, order still processing. Yeah, I mean it's crazy. Don't be afraid to give them a call. Call them up. All right, just call them up and see where they are with your order. I mean, a lot of us have been waiting over a month. I think the fastest one I got mine from was like SD Bullion. or JM Bullion. One of those was like the fastest one. I can't remember, but I was able to get it faster. But I really like my Scottsdale product. It's beautiful, man. So when you get your hands on it, you're gonna be like, yo, this is nice. This is worth the wait. So, but just make sure you secure your rates. Secure the rate that you get it in, because stuff is gonna continue to go. So that's where I stand at. You guys got anything you guys want to take a look at? I know we have 30 minutes right now. It's Mother's Day. So I want to take up too much of your time, but I'll take a look at some things from you guys real quick, and we'll go ahead and bring this to a close. I got some food waiting for me. I'm ready to get to that food over there. I know Ron probably got some plays. Where you at? CRUS? Cirrus. Okay, so on the weekly, we're looking good. Let's go take that high to that low, get some levels. Let's go on a daily. Yeah, I like this to the 786, Ron. See where we at. I like that to the 786 bullish setup. Okay. We got some triggers right there. A trigger. Momentum shift. All right. So yeah, I like this as long setup. It's above all of his moving averages. Right. Bingo. 786 target. All right. And then you said KR. Okay, Kroger. Yeah, this is going to an interesting situation here. It is bullish, of course. We got it trading above its moving averages. It's right here on the 9, and it's got that squeeze in there. Let's see, we got a trigger right back here. Came up a little bit, tapped the 618, came back to the 9. It's staying on the 9. It's trying to push through on the 9. I do like this to the long side. Don't know how far I can push up though. Let me see from this previous squeezes. Where do we normally doesn't make too much big moves, So I'll take a look at it right here at about the 786 again. Some stocks move real crazy big. With the squeeze pops. You just take a look in the past, how has it behaved in the past, and get some perspective. So I like it to about right there at that zone. In and out. That's it. That's right. You got to be like a surgeon, man. Okay, my man Xavier on the YouTube side. Take care of you too. Um, let's see where we are. Nvidia. All right, so Nvidia is a stone's throw from its new high. I don't see any reason why it should not be able to take out that new high. In fact, I think that they're more poised to take out that high and get another target here. Let's see where we are. Bingo. So yeah, from this high to this low, 340. That's the target. It is, again, it's overbought. But as you guys noticed in the past, I mean, we have times where they get crazy in the overbought territory, especially when it's aggressive trying to hit, a target. Um, you know, so it is, up in that overbought territory. But we have earnings that's coming up ahead, and we're just taking a look at all these other, tech companies. All these Nasdaq companies. Nvidia is critical for these computer chips, video games, and all this stuff. So, the story, that's their story. So I think they're going to be a winner here. Pretty positive they're going to be a winner here. All right. So everything about this is bullish. It's not at the best buying point, but you got to take what the market gives you. But I do like it to the long side, and I got this 340 target first zone, and then you got about 350 the next zone. So this is the zone right here for this range. So 353. So yeah, I got a 353 target on it basically. But this is another level that's right up above that you do have to watch. If it comes here, I'll be profit taking right up in there at 340. All right. Bitcoin, that's right. Yeah, Bitcoin has been going crazy. I don't actually trade Bitcoin itself. And what I do is we gauge the futures market on Bitcoin, right? And so Bitcoin is, they're having is a big situation for them. So um, it normally goes up. If you take a look in the past, who's this Don? If you take a look at the past, every time they do this, the Bitcoin, it goes up after it does that, every time. And that's probably why we're getting this move up right now. I think that those traders in particular are expecting that. However, This thing is already overbought. Let me just actually just show you what I'm looking at here when I take a look at this. Oops. Let's see. Here we go. All right. So when I take a look at this, what I see that we actually cleared. And again, what I did is I just take this swing high to this low. All right. And so there's a target that's above here. That's the bull case scenario. But you have to clear the 618, which is the major resistance level. So when we did this, this is back here, right? When we called after the, Bitcoin was doing this thing here, I was taking a look at it from there. And the time to get in was, right around here, catch it at this level. I didn't think it was going to clear this zone, but it actually did. And then it came up here. I really didn't think it was going to clear this zone because I caught a sell trigger right here. And it actually blew out the target. So it killed the shorts, right? Killed the shorts, and the shorts got a cover. So then you get that move that comes up. We're back at that level again. We're saying to sell. Um, so you get that sell trigger again. So this is the fake out. Boom, you get that pop, but it's not really a clear pop if it's back here now, right? So it's back here and it's overbought. And I never want to buy anything when it's in an overbought territory. It don't matter what it is, right? So even if it's Bitcoin, right, whatever the product is that you say, you never want to buy in an overbought territory, right? You want to get in down here, ride it up, sell out right there, and you do it over and over again, watch and repeat, right? So this is coming down, momentum's coming down. We do see that, and then we got a sell trigger here. And then as you can see right now in the futures market, it's actually already, coming down right now. It's a nice gap down, actually, really nice gap down. So if any shorts that was able to survive, they're probably getting a little relief. I mean, they got their heads cracked because they were shorting right here at the zone. I go into this intraday chart. They were shorting here and they got blasted on. All right, they got blasted on, and then it started, breaching this ceiling here. Now it's, bingo, drop down. Right. So, again, I'm not a Bitcoin trader, but I don't know if you guys are. Oh, and so I forgot you guys on the YouTube side, so you can't see the full screen. You catch the replay, you'll be able to see the full screen. If you join our chat room, you can see the full screen. But I forgot YouTube don't let you see the entire screen. But let me pull it down just a tad bit so you can see what I'm talking about. All right. So I don't know if you can see that. Maybe you can see that now. All right, on the YouTube side. So yeah, so if you can take a look at this is what I'm talking about. Right here, you fell all the way down. Bingo. What happens is a lot of the shorts was coming in here, bingo. And they got, they were feeling good, they was making some money, and they end up getting their heads cracked and end up breaching through this level. So this pink line is my 618 retracement. So that's what we get, gauging. The shorts, soon as it came back here again, shorts trying to come back in, boom, they get their heads cracked because it breached these levels, right? By the time it's doing all of this, it's hitting the news. New traders are coming in, right? New traders are coming in. All the new traders is piling in. It's like, oh yay, hope for Bitcoin again. And then you get the move like you see happening right now. Bingo. So whoever just got in, you're losing all your money. So because you got in an overbought territory, the prices are way too high. So again, I'm not a Bitcoin specialist, but just taking a look at the charts here, that's what we have. So hopefully that can, provide you with some perspective. Again, Bitcoin could say F everybody and turn around the next day because Bitcoin is a crazy thing. If you ever traded it before, this stuff is crazy. But I don't like the where it's at on the chart. It definitely needs to come back down. And if you want to buy this thing, you want to buy it when it's in these zones and the oversold territory. Let it come down here. When it come down here, you get a better position. All right, nothing goes up forever. So that's my take on that. First usually draws down for a short while, then it goes up longer term. Yeah, if you notice the behavior of it, for you Bitcoin specialists, you kind of familiar with that product. That's what it normally does with these hows. And I've been actually just curious to see, Bitcoin, you see what it's going to do. I was surprised to see it drop, that, especially when you had the Feds coming in printing all this money and things like that. You know, but it's got a little late rally right now. So although the stock market is rallying, Bitcoin is rallying at the same time. Pick your poison, man. I'm not gonna hate on anybody's product, but just know that just learn how to trade your product. Bitcoin has been a tough one, but it's starting to behave towards our analysis. When it first started, it was tough. We didn't have enough data. Once we got the grayscale and all that stuff, but now it is, behaving towards my targets, my moving averages and my Fibonacci levels. And so, feel a little more confident on the analysis on the Bitcoin side as well. So yeah, thank you. Thank you. All right. So with that being said, let's go ahead and bring this to a close, guys. I appreciate you guys showing up. We'll catch it back up next week. And any questions you guys have, members on the website and everything, Wall Street Jack Boys, make sure you can hit me directly. You got your inbox and everything. If you need any handouts, anything, just let me know. We're here to support you guys. But we'll get the edited version rolled out here tomorrow. So if you missed the live session, you'll get it in your inbox. Make sure you subscribe and everything. Happy Mother's Day to all you mothers out there. Hope you guys have a happy holidays. All right. So y'all have a good one. Peace.